Bitcoin, the king of cryptocurrency. But as we head into 2025, the big question on everyone's mind is Bitcoin still worth investing in? In this video, we'll break down Bitcoin's performance, the potential for growth, and the risks you need to know before deciding if it's still a smart investment. The Bitcoin legacy, a quick recap. Bitcoin was created in 2009 by the mysterious Satoshi Nakamoto as a decentralized digital currency. It introduced a new way to think about money, without the need for banks or government oversight. Initially, Bitcoin was a niche technology with little to no mainstream recognition. Its early adopters believed in its potential to revolutionize the financial system, but its volatility made it a risky bet. Over the years, Bitcoin's value skyrocketed, and it gained attention from both retail investors and institutions. As the first cryptocurrency, it set the stage for the creation of thousands of other digital assets. Despite its ups and downs, Bitcoin has remained the dominant cryptocurrency by market cap and continues to be seen as the benchmark for the entire sector. As we move into 2025, its position in the world of finance is stronger than ever. But the question remains, is it still a good investment? Bitcoin's performance. What to expect in 2025. Bitcoin's performance has been a rollercoaster ride, with meteoric rises and devastating crashes. Since its all-time high in late 2021, Bitcoin has experienced significant price corrections, but it has always bounced back. By 2025, Bitcoin has matured somewhat in terms of market structure and adoption. Institutional interest has brought more stability, with companies holding Bitcoin on their balance sheets and financial products like Bitcoin ETFs becoming more accessible. However, volatility is still a key characteristic of Bitcoin, and while it may not see the explosive growth of the early years, it could offer more steady returns compared to its past wild swings. With growing global acceptance and a more solidified role in the financial ecosystem, Bitcoin could potentially continue its gradual upward trajectory in the coming years, but investors will still need to navigate the inherent volatility. Bitcoin as a hedge against inflation. One of the main reasons investors flock to Bitcoin is its potential to act as a hedge against inflation. Traditional fiat currencies, like the US dollar, can lose purchasing power over time due to inflation, especially during periods of economic uncertainty. Bitcoin, on the other hand, has a fixed supply of 21 million coins, meaning it's immune to inflationary pressures caused by central banks printing more money. Over the years, Bitcoin has been compared to gold as a store of value. In countries with high inflation or political instability, many people have turned to Bitcoin to preserve wealth. In 2025, this trend may continue as more individuals and institutions seek assets that can hold value in a volatile global economy. However, while Bitcoin is seen as a store of value, it's still susceptible to significant price fluctuations, which means it's not a risk-free hedge. The risks, volatility, and regulation. While Bitcoin has captured the imagination of investors worldwide, it is not without its risks. One of the most significant is its inherent volatility. Bitcoin's price can fluctuate wildly in short periods, leading to substantial gains or steep losses. This volatility can be exacerbated by global economic events, media hype, or large institutional moves. Additionally, regulatory uncertainty looms large. Governments and financial regulators around the world are still figuring out how to classify and control cryptocurrencies. In 2025, we may see new regulations that either provide clearer rules for Bitcoin's use or impose restrictions that could hurt its value. For example, governments could impose stricter tax rules, ban certain types of transactions, or even crack down on Bitcoin mining. While regulation could bring legitimacy to the market, it could also dampen growth or limit the freedoms that made Bitcoin so attractive in the first place. Investors must weigh these risks carefully. The environmental debate. Is Bitcoin sustainable? Bitcoin's environmental impact has been a hotly debated topic for years, primarily due to the energy consumption involved in mining the cryptocurrency. Bitcoin mining requires specialized hardware and a significant amount of electricity, often derived from non-renewable sources. Critics argue that this is unsustainable and contributes to global warming. However, the narrative around Bitcoin's environmental impact is evolving. In 2025, we're seeing more mining operations shift towards renewable energy sources, and some companies are even using excess energy from natural resources like hydroelectric power or flared gas. Additionally, Bitcoin's network is increasingly being supported by efforts to make mining more energy efficient. While the environmental concerns still exist, advancements in technology and increased adoption of green energy solutions may help mitigate Bitcoin's carbon footprint. For investors, understanding the balance between Bitcoin's ecological impact and its potential as a financial asset is key to making informed decisions in the years ahead. Bitcoin versus other cryptos. Is Bitcoin still the best option? Bitcoin has always been the pioneer of the cryptocurrency world, but with the rise of altcoins, investors are increasingly questioning whether Bitcoin remains the best option. Cryptocurrencies like Ethereum, Solana, and Cardano offer faster transaction speeds, lower fees, and more advanced functionalities such as smart contracts and decentralized applications. These features make them more attractive for specific use cases like decentralized finance, DeFi, and non-fungible tokens, NFTs. However, Bitcoin still holds the position of being the most established and secure cryptocurrency, often referred to as digital gold. It has a proven track record and a larger, more stable network. But as blockchain technology continues to evolve and new use cases for cryptocurrencies emerge, investors may start to diversify their portfolios. In 2025, Bitcoin will likely still be the leading asset in terms of market capitalization, but other cryptos may offer advantages that could make them more appealing for certain types of investors. Real-world use cases of Bitcoin in 2025. Bitcoin is no longer just a speculative investment. It is increasingly being used in real-world applications. In 2025, Bitcoin's role as a method of payment continues to grow. More merchants around the world are accepting Bitcoin as a form of payment, especially in countries with unstable currencies or in areas with limited access to traditional banking services. Additionally, Bitcoin is becoming a popular tool for cross-border remittances, allowing users to send money across the globe quickly and with lower fees than traditional financial services. Bitcoin is also gaining traction as a store of value, especially in countries with high inflation rates. Its use in decentralized finance, DeFi protocols, as collateral for loans, and as an investment asset is expanding. As the global economy continues to embrace cryptocurrencies, Bitcoin's real-world utility will likely continue to evolve, and its adoption in daily life may become more widespread by 2025. How to get started with Bitcoin in 2025. If you're thinking about jumping into the world of Bitcoin in 2025, getting started has never been easier. First, you'll need to choose a cryptocurrency exchange that is beginner-friendly and offers secure transactions. Platforms like Coinbase, Binance, and Kraken allow users to buy Bitcoin with traditional payment methods like bank transfers, credit cards, or even PayPal. Once you've created an account, you can transfer funds into your exchange wallet and make your first purchase of Bitcoin. It's also essential to store your Bitcoin securely, especially if you're planning on holding it long-term. Hardware wallets like Ledger or Trezor offer a secure way to store your crypto offline. Additionally, many exchanges now offer educational resources to help beginners understand the basics of cryptocurrency and investing. For those looking to dip their toes in before going all in, fractional Bitcoin purchases allow you to invest small amounts without committing to a full coin. Thanks for watching. If you found this video helpful, hit that like button and make sure to subscribe for more crypto insights. Drop your questions or thoughts in the comments below. I'd love to hear what you think about Bitcoin's future. See you in the next video.